Hi, Jason Sen from Day Trade Ideas, looking at the Aussie dollar at the start of this first week of December. This is the weekly chart in a downtrend. We had a good bounce through November, well, to the end of October actually, up to 38.2% Fibonacci resistance, and that held. And then, of course, we've just resumed the bear trend ever since. Weekly chart is telling us nothing other than we're in a bear trend, and we should continue lower, heading into oversold territory on the stochastics, but certainly nothing to not enough to even think about a bottoming out at this stage. We'll have a look at the daily chart. So the break below the 100-day moving average and the trend line in this area here on the, what day was that? The 21st of November, kept us lower, and we hit the next Fibonacci target, 78.6% of 90.64. We're just managing to hold on there, and on Friday we got down to 90.52 but saw a good bounce. So this bounce has continued today, and because we got so oversold on the daily chart, there is just a little bit more upside. Again, this is just a bounce in a bear trend. It's nothing to get too positive about, but I think there is a little bit more room on the upside. We'll have a look at the 4-hour charts just to see where we need to go. This is almost a double bottom here. So it's fairly positive, but we will need to hold above 91.50, and we haven't actually managed to do that today. The high today is 91.68, but we're dipping below 91.50. So we've really got to get back above 91.45, 91.50 to look positive again. Problem is, short term, we've now got overbought, and we're in a bear trend, so we're going to struggle to make any further gains today. We could head lower into the session, and of course the obvious target would be back down to the 90.50, 90.60, 90.50 area. Really, we could stop around the 92, 91, 00, 90, 90 area. That could hold the downside, but just be aware that the 90.60, 90.50 area is very important. Bearing in mind how oversold we are on the daily chart, we could just range now for a few days in between the 90.50, 91.50 area. Maybe that 100 pip range will hold us. That would allow the daily stochastic to unwind over the next few days, maybe get up to around the middle of this range, around the 50 area, before we sell off again. It's really only above 92.00 that we can get more positive, and then of course we've got the 100-day moving average at 92.75 area, so I don't really see us getting anywhere near that. But if we did manage to get up there, that's probably a nice little opportunity to get short again and look for the bear trend to resume. Break below 90.50 and we're in trouble again. The bear trend will continue. It'll be the next leg down, and I don't really see an awful lot in the way of this. I think this is an August low. Yeah, August low at 88.90, 88.80 area would be the next main target for the Aussie. I'm sure we'll see that eventually, but we may just trend sideways or edge slightly higher before we hit that, which could easily be seen before the end of December, that 88.90, 88.80 area. Okay, that's it for Aussie for today. I'm Jason Sen from daytradeideas.com.